Non-fungible tokens, also called NFTs, seem to be everywhere these days, from art and music to tacos and toilet paper. These digital assets are selling like 17th century exotic Dutch tulips, some for millions of dollars. But what are NFTs, and are they worth the money or the hype? Some experts say they're a bubble poised to pop, like the .com craze or Beanie Babies. Others believe NFTs are here to stay, and they will change investing forever. Want to know more about it? Stay tuned in this video. Before we start the video, please know that this is not financial advice in any shape or form. This content is for entertainment and educational purposes only. When needed, please contact a professional. Let's begin with what is an NFT. NFTs are digital assets that represent real-world objects such as art, music, in-game items, and videos. They're often bought and sold online using cryptocurrencies and are usually encoded in the same underlying software as many other cryptocurrencies. Introduced in 2014, the NFT is now notorious for its increasingly popular way to buy and sell digital art. The NFT market is worth an astonishing $41 billion in 2021 alone, approaching the combined value of the global art market as a whole. NFT is generally its own, or at least a very limited edition, and has a unique identification code. Essentially, NFTs create digital scarcity, said Ryu, chair of the Washington Technology Industry Association's Cascadia Blockchain Council and executive director of Yellow Umbrella Ventures. This is in stark contrast to most digital works, which are often infinitely available. Hypothetically, supply cuts should increase the value of a particular asset, assuming there's demand for it. But many NFTs, at least in the early days, already existed in some form elsewhere, such as iconic video clips of NBA games, or authenticated versions of digital art already floating on Instagram. Famous digital artist Mike Winkelmann, better known as Beeple, crafted a composite of 5,000 daily drawings to create perhaps the most famous NFT of 2021, Every Day's The First 5,000 Days, which sold at Christie's for a record-breaking $69.3 million. Anyone can view individual images. You can also view the entire collage of images online for free. So why are people willing to pay millions for what they can scan or download? The NFT allows the purchaser to own the original item. In addition, it includes a built-in certificate that acts as a proof of ownership. Collectors value these digital bragging rights much more than the object itself. How does an NFT work? NFTs reside on the blockchain, a distributed public ledger that records transactions. Probably the most familiar with blockchain as the underlying process that enables cryptocurrencies. In particular, NFTs are usually held on the Ethereum blockchain, but other blockchains are also supported. NFT is created from digital objects that represent tangible and intangible items such as graphic art, GIFs, videos and sports highlights, collectibles, virtual avatars and video game skins, designer sneakers, music. Tweets are also counted. Twitter co-founder Jack Dorsey sold his first tweet as his NFT for over $2.9 million. Basically, NFTs are like physical collections, digital only. Therefore, instead of painting the actual oil painting on the wall, the buyer receives a digital file. They also get exclusive ownership rights. NFTs can have only one owner at a time, and their use of blockchain technology makes it easy to verify ownership and transfer tokens between owners. The creator can also store specific information in an NFT's metadata. For instance, artists can sign their artwork by including their signature in the file. What are NFTs used for? Blockchain technology and NFTs provide artists and content creators with unique opportunities to monetize their products. For example, artists no longer have to rely on galleries or auction houses to sell their art. Instead, artists can sell it directly to consumers as an NFT to maintain more profit. In addition, artists can program royalty payments to receive a portion of their sales when the art is sold to new owners. This is a fascinating feature. This is because artists usually cannot receive future revenue after the work is first sold. Art isn't the only way to make money from NFTs. Brands such as Charmin and Taco Bell are auctioning NFT-themed art to raise money for charity. Charmin named his offering NFTP, non-alternative toilet paper. Taco Bell's NFT art sold out in minutes, and the highest bid was 1.5 lap Ether, WETH, at $3,723 and $83 at the time of this writing. Equivalent, the Nyan cat was a GIF of a Pop-Tart-shaped cat that sold for nearly $600,000 in February. And the NBA Top Shot made him more than $500 million at the end of March. His highlight of LeBron James's NFT was his one-time earnings of over $200,000. Even celebrities like Snoop Dogg and Lindsay Lohan have jumped on the NFT bandwagon, releasing their own unique memories, artworks, and moments as NFTs. How to buy NFTs? It's an easy process to buy an NFT once you've funded your account. Most marketplaces are in an auction format, so you'll need to submit a bid for the NFT you want to purchase. Some marketplaces operate more like an exchange, using highest bid and lowest ask for NFTs that have several prints. A benefit of purchasing an NFT from the primary marketplace is the potential resale value directly after the product goes on sale. Some NFTs that are high in demand will sell for 5 to 10 times their initial price right after the release. The downside to buying NFTs on the primary marketplace is it's hard to estimate the demand for the art. On the secondary marketplace, you can compare your purchase to previous sales. Should you buy NFTs? Just because you can buy NFTs, does that mean you should? It depends, says you. NFTs are risky because their future is uncertain and they don't yet have the history to judge their performance, she said. NFTs are so new that it's worth investing a small amount for the time being. In other words, investing in NFTs is largely a personal decision. If you have the money to spare, it might be worth considering, especially if the piece is meaningful to you. But remember, the value of an NFT depends only on whether someone else is willing to pay for it. As such, prices are typically driven by demand rather than the fundamental, technical, or economic indicators that drive stock prices and, at least generally, form the basis of investor demand. All this means that the NFT may be resold for less than the price paid, or if no one wants it, you can't resell it at all. NFTs are subject to capital gains tax in the same way that shares are sold for profit. However, because they're considered collectible, they may not receive the preferential long-term capital gains rate of equities and may even be taxed at higher collectible tax rates. Although the IRS does not consider which NFTs are taxable, haven't decided yet if it applies for what purpose. Please note that cryptocurrencies used to purchase NFTs may also be taxed if they appreciate in value after purchase. That said, if you're considering adding NFTs to your portfolio, we recommend consulting with your tax advisor. That said, approach NFTs just like you would any investment. Do your research, understand the risks, including that you might lose all of your investing dollars, and if you decide to take the plunge, proceed with a healthy dose of caution. That being said, we hope that you enjoyed this video. Give it a thumbs up and subscribe to the channel. With that, the video comes to an end. Thanks for watching, and I will see you in the next one.